financial planning changed my own life, and it sparked a passion in me that I wanted to help others do the same. So I joined the industry because I wanted people to find more peace and joy and utility with their money. So I originally from an asset management firm. It gave me a lot of technical expertise to be able to help my clients with the objective financial advice that they're looking for. I've prepared thousands of tax returns over the years, so I have a deep understanding of tax, and I've worked with hundreds of clients from all walks of life, including incorporated professionals, physicians, retirees, and those looking to retire, among many others. Fee-only financial advice is the only source of objective financial advice that somebody can get. So our clients have the peace of mind and mental ease of knowing that the only interests we have are theirs. All we sell is peace of mind, so they just know that their interests are our interests. When somebody comes to us and they're basically kept up at night by the worries of retirement and worried about what is gonna happen to them, how much money they're gonna have, will they run out? And I get to help them and say, not only will you not run out, but here's a bunch of ways to maximize your retirement and get the best life for you and your family that you could. That is so unbelievably rewarding. Our discovery and assumptions meeting. So discovery is meant to be both playful and thorough, but it can be a little unsettling too, because we'll be asking you a ton of questions like about your life and your kids' life, and a lot of other questions you haven't thought of before, but we'll also be asking you more about death than you're probably used to talking about. After the discovery meeting, I'm going to be doing a thorough analysis of your financial situation. When we meet next, it'll be to discuss with you the issues and opportunities that I found in that analysis, as well as the strategies and recommendations that I think we can implement to help get you closer to your goals. I want to make sure that you understand and believe in the strategies and that you're satisfied in them. After that, you'll get your plan that will be a roadmap to guide you. And then you're often in a flat fee engagement, you'll have paid for support. So I'll be available to assist you in implementing your financial plan. Retirement planning starts with an understanding of who you are and what you're hoping to achieve. So I want to ask you questions like, do you hate work or do you like it? Does your family and kids need financial support or don't they? Do you have longevity in your family or do you have health concerns? What do you want your retirement to look like and what are you envisioning and what's keeping you up at night with retirement planning? So once we have a good sense of who you are and what you're hoping to achieve, then we measure what you have and if it's going to help you get you where you want to go. Like we'll look at investment accounts, pensions, government benefits, and your spending rates, and we'll map out and see if you're going to achieve your goals. If there's a gap, then we'll look for strategies and ways to get you closer to your goal. If there is enough, we'll be looking for opportunities, things that we can do to help improve your financial situation. Things like timing of CPP and OAS clawback, trying to avoid that, and income splitting opportunities, things like that, among many, many others. We shouldn't try to avoid paying tax at the expense of earning more income, so I want to preface with that. However, tax is one of the biggest expenses that any of us are ever going to pay in our lives. So tax planning as a way to reduce your total lifetime tax is kind of a cornerstone of financial planning. So I'll give you an example, retiree. So if a retiree has a large tax-deferred account like an RSP, and they avoid taking minimums until they're required to at age 72, those minimums combined with their government pensions could result in significant OAS clawback. And then if you followed along, they have OAS clawback, so now they're even further disincentivized from withdrawing from their accounts. So this RSP just continues to grow to an unmanageable size and they end up having a large part of it paid to CRA when they pass. In that case, what we might do is recommend this retiree pull extra from their retirement accounts in the early years to sort of reduce the size of that RSP and have lower minimums and get more of the assets out tax effectively.